What's going on, guys? Wanted to hop on today and talk about a trade that I took yesterday on the NASDAQ. We took a very nice long for about 100 points to finish the week, and I wanted to walk you through today everything like I always do through my trade thesis, confirmations, trade management, and exits, all that good stuff. So without further ado, let's get into it. So, like I said, we took a long yesterday during the New York AM session, and we've really been focusing on the 10 a.m. key open and buying beneath opening prices if we're bullish, and buying and selling above opening prices if we're bearish. For yesterday's situation, we were expecting a bullish expansion, so I wanted to buy beneath the midnight, 8:30, and 10 a.m. open after sweeping sell-side liquidity. Going into yesterday's news, we had CPI in the morning at 8:30. That provided really nothing at all. Price continued to consolidate after that, so that was even more confirmation that I wanted to wait for the 10 a.m. candle to open up to see how price would generate liquidity to the upside before I was expecting the run on sell-side liquidity before we went higher. Going to be focusing in on this daily chart right here. You can see that we're obviously working towards these buy-side liquidity after running this inversion fair value gap, that previous bearish fair value gap on the daily chart. I'm expecting the upper half, upper quadrant of the wick to hold before a run higher. So I would like to see after 10 a.m. a run into this wick before moving higher. Dropping down to a 15-minute chart, you can see after CPI, we continue to consolidate. It wasn't until 10 a.m. where we manipulated lower, had a real run on these relatively equal lows right here into that upper quadrant of that daily wick that's transposed down onto the 15-minute chart. You can see we're holding above the 50% of it, holding above the upper quadrant of it before we have a run on that buy-side liquidity. Dropping down to a 5-minute chart, this annotates the 10 a.m. Open and manipulation a bit better. You can see right here we have all of this high resistance liquidity before 10 a.m., all of this high resistance liquidity, and we have these generated sell-side liquidity, relatively equal lows. And you can see we have this high that was generated, this high, this high, this high. I'm expecting all of this to get ran after a run on sell-side liquidity while respecting the upper quadrant of that daily wick to run higher. Dropping down to a 1-minute chart, this really shows what I was watching for after the 10 a.m. open. I wanted to see a run on sell-side liquidity, because if we're bullish, we're expecting a run on sell-side liquidity before the run on to buy side. So you can see that we have all of these relatively equal lows right here get ran out at 10:30. Notice how before 10:30, all of this price action is just high resistance, and then it's not until 10 o'clock where we have a real clean manipulation lower into the upper quadrant of that daily wick before we have an inversion fair value gap, and having a nice clean run, running all of these buy stops to take out that ultimate buy-side liquidity. Here's the execution. For whatever reason, the Trade of 8 wouldn't allow me to put in my execution marks that I usually have for the presentation, but this is going to have to do for today. After we have that run on sell-side liquidity post 10 a.m. into the daily wick, holding the upper quadrant, we have a run on this fair value gap, this previous bearish fair value gap. An aggressive entry would be a closure above that fair value gap with a stop loss beneath it. We caught about a nice 1 to 4R, I believe it was. We had to run all the way to buy side liquidity, where that is where I took all of my profits off there. Here we have our regular trading hours gap. So one thing with the regular trading hours gap is we're in a rich premium when we first open. And if I'm expecting higher prices, I want to see a drop into some sort of discount first before we run higher. And you can see that, like I was saying, before 10 a.m., we have all of this high resistance liquidity that is being generated, that's generating buy side liquidity here, here, here. So I'm expecting all of this to get ran. So once 10 a.m. opens, I'm expecting a manipulation beneath sell side liquidity before we have a run on this bearish inversion before running ultimately to the buy side liquidity. This is annotating the regular trading hours gap where we had yesterday's regular trading hour close right here, and then we had our open. You can see we respect the 50% of that regular trading hour gap. Notice the wicks doing the damage, running out sell side, but the bodies are staying and closing in the upper quadrant of that regular trading hours gap. This is what we love to see for bullish signatures if we're expecting higher prices. I don't want to be a buyer up here initially when we open up. I want to be a buyer down here in discount. So we have this run lower, and then we had a run higher. Dropping down to a 1-minute chart on regular trading hours, we can see the gap. Price remaining in the upper quadrant, above 50% of that regular trading hour gap. Wicks are doing the damage, but the bodies are still closing higher into the upper quadrant of that regular trading hours gap. We have the 1-minute inversion where I noted the entry that I took with a stop loss beneath this low. Once we had the closure through this inversion fair value gap, running all the way to buy side liquidity. One thing with this trade is I did allow my full trade, like my full position, to run the buy side liquidity just because I had heavy conviction in this trade, and it's something that I'm working on, is allowing my winners to run to full target if I have such high conviction. So that's one thing that I was really proud of yesterday. Here's the dollar index chart. We can see that after running the daily relatively equal highs, buy side liquidity, price is rolling over, and now we're running all of this generated sell side liquidity before running to these lows, and you can see we're starting to make some relatively equal lows on the dollar index. So I will be expecting lower prices on the dollar index and possibly higher prices still on NASDAQ and ES as the dollar index goes lower into this daily sell side liquidity. And as the dollar index goes lower into the daily sell side liquidity, is going to relieve pressure on the NASDAQ and the S&P 500 and allow for higher prices. So, lessons from this trade: let the first 30 minutes build. Like I was saying, for the first 30 minutes, we have all of this generated buy side liquidity, high resistance liquidity, and it's not until 10 a.m. where we start to have a real clean move this beneath the 10 a.m. key open into the daily wick and holding the upper quadrant of it. Buying beneath opening prices is extremely important. Entries below the midnight, 8:30, and 10 o'clock open provides discounted positioning price, and deep discounts equal higher probability longs. So like I was saying here, once price opens up and we gap higher, I don't want to be an initial buyer here, okay? Because I want to see these run on these buy stops, and then I move lower into discount beneath sell side liquidity. Where would you rather be a buyer at? Would you rather be a buyer up here, or would you rather be a buyer down here? I'd rather be a buyer down here because this is discount. There's multiple areas of support here, and I'm expecting higher prices after all of this buy side liquidity is being engineered before the 10 a.m. open. Previous day's upper quadrant is important to note for being respected, because if we see that that upper quadrant is being respected, then we can expect higher prices. Where we at? So here, this blue box annotating the previous day's wick, prices respecting the upper quadrant of that wick before we run higher. Correlating the dollar index for confluence. This is one of the main things that has really helped me in my trading this year, is understanding where the dollar index is expanding for, because then I'm going to try and have intermarket confluence with the S&P 500 the NASDAQ and the dollar index. So like I was saying, as the dollar index is rolling lower, I'm expecting higher prices on NASDAQ and S&P 500 as they run inverse to each other. And then last but not least, if we're bullish, we're waiting for sweeps with sell-side liquidity beneath opening prices. So here we have midnight open, 8:30 open, I believe, is somewhere right around here. And then this is the 10 a.m. key open. If we're buying beneath if we're bullish, we want to be buying beneath all of these opening prices, because this is a very, very deep discount for the day. Like I said, I don't want to be buying up here above all of the opening prices, knowing that there's a possibility where price can manipulate beneath those opening prices and offer very, very nice discount entries. So with that being said, that's all for today. I really hope that you guys took something from today's trade recap. I really hope that you guys are continuing to trade safe in these interesting markets. And until next time, I will talk to you guys later, and trade safe.